In today's video, I'm going to teach you how to select an account for a transaction in QuickBooks. The goal is to help you choose the right form and the right account so your books stay clean, reports make sense, and reconciliation is smooth. Start by opening QuickBooks and heading to your dashboard. From there, look for the Create or New button. This menu is the command center for recording activity. The type of form you choose tells QuickBooks which accounts to use behind the scenes, so picking the correct one is key before you ever touch a category or payment field. If you need to bill a customer who will pay later, choose Invoice. An invoice posts to accounts receivable and to the income accounts mapped to the products and services on the form. To keep the right income account selected, make sure you pick the correct product or service item, since each item is linked to an income account. Add your customer terms and due date so AR aging is accurate. When payment comes in later, you'll record it separately, so don't choose a deposit account here. QuickBooks tracks this as money owed. If the customer is paying you immediately, choose Sales Receipt. This records the sale and the payment in one step. Here, the deposit to field is where you select the account for the money. Choose Undeposited Funds if you'll group multiple payments into one bank deposit later, or select a specific checking account if it's a single payment going straight to the bank. Add the payment method and confirm the product or service lines point to the correct income accounts. To record money you've spent directly, use Expense. Start by selecting the payee and the payment account. This is the bank, credit card, or cash account the money came from. In the category details, pick the appropriate expense or cost account, such as office supplies, utilities, or cost of goods sold. If you're tracking items, you can use the Item Details section instead, which posts to the accounts tied to each item. Include a memo or attach a receipt for clear audit trails. When you're paying a vendor bill you already entered, use Bill Payment. Choose the payment account you're paying from, select the vendor, and check the open bill or bills to apply. This reduces accounts payable and reflects the cash leaving your bank account. Make sure the payment date matches your actual payment date for accurate cash flow. Before you finish, give your selections a quick review: the transaction type, the payment or deposit account, and the categories or items. Consistency here keeps your financials reliable and makes reconciling a breeze.